Ladies and gentlemen, welcome back to the channel. AMC Stock is in the green again today. This is great news after seeing like 7 down days in a row and big down days at that. 15 to 20+% down days. You're starting to actually get some green here. So yesterday you were green by 16.68%. This was a move from the low of $10.73 to close at the high, or to actually hit the high of the day at $13.64. You closed at $12.73, and now today you have hit a low of $12.75, and now you are at $13.44. So you are making your way to the upside, and one of the reasons why AMC is up today is going to shock you, because AMC has never reacted to anything like this in the past. So maybe now that the court situation is out of the way, the stock maybe responds to fundamental good news. That's a possibility. It's really hard to say, but yeah. Taylor Swift, you can contribute or attribute this 5% move to her new tour movie. Yeah, apparently they've been filming this Eras tour, and it's going to be heading to theaters in October. This announcement today is sending AMC stock up about 5%. The pop star confirmed a film version of her show will debut in theaters beginning on October 13th. In a separate press release, AMC called the movie the theatrical event of the millennium. Other theater stocks like IMAX and Cinemark also moved higher on the news. This release will be a welcomed event for theater chains struggling to fill the rest of the year's box office slate amid the ongoing Hollywood strikes. Warner Bros. Dune sequel was recently slated to March 2024 after originally scheduled for November of 2023. Kevin Clouden, chief global strategist at the Milken Institute, estimated the current strikes will soon cost the national economy $5 billion, plus upwardly revising his previous estimate of $4 billion. The main thing we're really factoring into it is the lost wages, Clouden told Yahoo Finance Live on an interview on Thursday. Says on top of lost wages, Clouden said delayed films like Dune and canceled programming such as Amazon's A League of Their Own will also heavily contribute to losses. So it's basically saying it could be a big film when we're really not expecting a lot of big films to head to theaters because of this strike. So I guess fundamentally this makes a little bit of sense, but we've never seen AMC react to something like this in the past, but it is today. I'm not going to argue with it. Maybe it's a new era of AMC stock where we can actually react to good news, because all we've basically gotten is good news over the past 2 years or so. AMC, for all intents and purposes, just turned a profit, and the stock did not react at all. Other stocks, when they're turning profits in this market after being, losing money for years, well, they go up 40%, 50% sometimes in a single day. AMC, not that. So we'll see ultimately what happens, obviously. But AMC stock is up 6.44%. Now, let's get into what's actually happening on the day today and what the data looks like for AMC stock. So let's start with what happened today. So what happened today? Well, we got a lot of data that came out. So we got personal income month over month. That came in at 0.2%, better than the 0.3% estimate. That is good. No wage price spiral. Personal spending came in at 0.8%. That is good. You want to see spending because that is what is keeping us out of a recession, at least out of the government's technical definition of a recession. You were expecting 0.7%, so that was a beat there. So far, so good. Everything's looking pretty dang perfect, to say the least. Core PC price index month over month came in at 0.2%. The estimate was 0.2%. As I said before, that is fine. That's 2.4% annualized. The markets can live with that. Year over year, PCE came in at 3.3%. The estimate was 3.3%, so that is okay as well. PC price index month over month, your headline came in at 0.2%. You were also expecting 0.2%. Initial jobless claims came in even lower than expectations, which is crazy. This is all like a Goldilocks scenario of data that came out today, and that's why the markets are up yet again. And the estimate for initial jobless claims was 236,000. So all across the board, better than expectations. Chicago PMI came out at 48.7, still contractionary, but much better than the estimate of 45. So looking pretty good there as well. Now tomorrow we're going to have some very important economic data coming out as well. The biggest data of this week, and that's where you're going to get the non-farm payroll report as well as the unemployment rate. You're expecting 170,000 job ads for the non-farm payroll report. Anything lower than that, it's going to be okay, but just not too low. You don't want to see a number that is too low. And then obviously anything above like 200,000 is probably not going to be seen as a great thing for the markets as well. Now the unemployment rate expected at 3.5%. We'll see what happens. We've seen big jumps here before, and if we get another big jump, that's going to be a problem. But best case scenario, you stay at about 3.5%. At the same time, you're seeing inflation cooling down, wages falling today, personal spending is up. That is your Goldilocks soft landing scenario, as long as unemployment stays docile tomorrow and non-farm payrolls don't explode to the upside or basically crater to the downside. Looking pretty good so far though, and that is what is causing the markets to move higher today. Now, we are going to have some earnings here in after hours today, and we had some earnings in pre-market today. Dollar General, most notably, down like 20%. Not so good. They cite theft and other reasons why their margins are falling, but either way, Dollar General doing poorly is not a great sign for the economy, no matter what the other data says. Just not a great sign. But today in after hours, two companies that really stand out to me. There's other important ones, but Broadcom and Lululemon. Take a look at Broadcom over here, right? Oh, I'll have to pull it up. Or even Lululemon, a premium brand. We'll see how that is. But Broadcom is one of the stocks that has really benefited from this AI hopium or this AI wave in the markets. I mean, look at it. Its previous 52-week high or all-time high back here, this was December of 2021, was about $650. The stock is $915 today. This is all based on AI, right? They make chips for iPhones. So they report today in after hours. They don't usually move too big on earnings. 7 to 10% is a decent move for them. So we'll see. If the stock falls a lot or rallies a lot, it could really send some new level of opium into the markets. And same thing for Lululemon. You want to see how that top of the line consumer is doing for that premium product. Now, in regards to AMC, I think that's what you guys really care about. I go over other things as well because I think it can move the markets, and when the markets move, that could obviously affect AMC as well. What we've seen recently, though, is weakness in the markets has actually been to AMC's benefit, which is kind of what we have seen in the past as well. I think it puts pressure on hedge funds and institutions when their longs are going against them, and then their shorts, like on AMC, are also going against them, guys. So let's look at the data here. Again, the Ortex data is not accurate. You really have to take it with a big grain of salt, especially like your short interest numbers. We're probably not going to have a real estimate until we get the next official short interest report that does come out. But right now we have a short score of 81, $235 million worth of short positions on AMC stock. Again, it says 13.02%. These are not accurate. We're probably in between 35 and 45% as per my own estimates. Free flow out on loan, 19.25%. But then you look at shares out on loan, and that's 27.18 million. That is like 50% of the float that is out on loan. So these numbers don't make any sense. Days to cover, 4.57. utilization at 81.18. Now, if we take a look at the live short interest, we will see 10% cost to borrow fees. I don't know if this is accurate. It is coming through from Interactive Brokers. That would be weird if it is, because you just basically seen within a day's period, cost to borrow fees go from almost 1,000% down to less than 20%. So I don't know if these numbers are accurate as well, but that would be a really strange collapse of the cost to borrow fees if they were to be true. Now, yeah, it says cost to borrow max 9.25%, cost to borrow average 8.62%, cost to borrow minimum 7.26%. I don't think these numbers are accurate whatsoever. AMC stock is still on the threshold securities list. No shocker there. They are in no hurry to cover out of their FTD positions. If you take a look at the numbers that we are seeing for August 31st, that is today, we have 6.8 million FTDs that come due. Tomorrow you have 7.1 million FTDs. And then starting off the next week, we're going to have 7.7 million FTDs. And then it basically stays in the 7 to 4.5 million FTD range for the next couple of weeks. So there's going to be a lot of shares that need to be bought back over just the next couple of weeks. We're talking millions of shares that obviously could have an effect on AMC, considering the float of AMC is now less than 60 million. And that's obviously before AMC does dilute shareholders, right? If they come out and they raise 10 million shares, well, the float's going to be larger at that point. But as of right now, that has not happened, and I think that actually could be a positive catalyst because we've already sold off so much with AMC stock. Like, you've already priced in a lot of dilution. So if that dilution does come, I don't think it's going to be a big shocker. I think that could actually be pretty dang bullish for AMC. Now, as far as the option activity, the tides have turned a little bit. Now, you're looking at the calls in the money of 23,603. Calls out the money, 43,361. So you do have more calls that are now in the money than puts that are in the money. And this is way different from what we have seen recently. Puts in the money at 17,078. Puts out the money at 57,768. So that's different. Okay, now let's take a look at the actual option chain and see what is going on today. And we're looking at the expiration of this Friday, September 1st. And at the $13 strike, we've pointed this out before. But you had about 9,400 calls go into the money at the $13 strike on the call side. About 8,500 puts go out of the money at the $13 strike as well. The $13.50, a lot less activity, about 3,800 on the call side and 169 on the put side. What we have for the $14 strike is about 4,000 on the call side and 1,100 on the put side. And what you'll even notice here, if you look at the puts now, from where we are right now, 1350, all the way to the 1750 strike, there's not a lot of puts at all. Like, people are not betting as far as buying puts on AMC on these in the money puts anymore like they were. But if you look at the call side, it's a lot different, right? You have 4,000 here, 5,000 here, 8,500 here, 4,300 here, 16,000, almost 17,000 here, 1,300. Whereas you're looking at on the put side 4, 16, 22, 44, 267, 172, right? Not a lot of activity on the put side. So I think that is also potentially a factor that is helping AMC to go higher. It's just not, you're not seeing as much of that kind of malicious almost put buying activity that creating those synthetic positions. So there is that. That's kind of what's happening today. You have the RSI that is still oversold at 28.03, so under 30, under that way under that neutral level of 50, but even under the oversold level of 30. If you look at the MACD, that is extremely negative as well, which is not too uncommon for AMC, but the gap here, the spread, is very unusual. The MACD is starting to curl up, so if we do get some more upside from here, which again I expect we could bounce to, you know, the mid-20s pretty soon, that's where the MACD might start to curl up and actually start to look a lot more positive. So these are some of the things that I am looking at today. All in all, today is a great day. Any day we're green is a great day, and I do think there is more upside to come. Obviously, shorts have to cover on short positions. What a perfect time to cover on your short position if you are a short, and the short interest is likely, you know, 35 to 45%. We've seen from different kind of brokerages at points saying the short interest is 90-95%. So we'll have to see where the official short interest report comes out as, and then see what Ortex's estimates are based on that. So that is basically going to do it for this video. That is all you need to know. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.